Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm speaking to you from New York City on this, the 12th day of February 2019. And as always, I'd like to remind you, I am the editor of a newsletter that focuses on the mining sector, in particular the precious metals mining sector. It's Jay Taylor's Gold, Energy, and Tech Jay Taylor's Gold, Energy, and Tech Stocks is the name of the newsletter. Go to miningstocks.com to sign up for my letter. Or you can call our office here in New York at 718-457-1426, 718-457-1426 during normal work hours. Also like to encourage you to consider signing up for Chen Lin's letter. ChenPix.com is the place to go for that, ChenPix.com. If you're interested in cutting-edge biotechnology issues or high-risk, high-return stories that Chen focuses on, Chen's letter is the best I know of for that field, so you may want to consider subscribing to ChenPix.com. Or if you'd like to just really have a good sense of where all manner of markets are heading, to know whether we're in bull markets or bear markets, highly recommended in this letter, or in this radio show, is Michael Oliver's newsletter, OliverMSA.com. OliverMSA.com is the place to go to, and we'll be talking to Michael just in a couple of minutes from now. Thank you for listening to this show. Thank you for making it one of the more well listened to shows at the Voice America Business channel. And we also like to encourage you to send your questions or comments along to questionsfortaylor@gmail.com. Questions, the number 4 Taylor@gmail.com. And of course, we do want to thank our sponsors, because without them we would not have a show. Our sponsors that make this show economically viable today are RN Resources, Great Bear Resources, which we're really pleased to have join us because of their phenomenal success at Red Lake. Noble Resources is another one, Triumph Gold, Gold Mining Inc., Uranium Energy, and Miramont Resources. And I'll be talking to the Vice President of Explorations from Triumph Gold after our first commercial break today. I've titled today's show, Pierre Lassonde's Views of the Gold Mining Sector. As the title of our show implies, our main guest this week is the legendary investor, Canadian gold mine investor, Pierre Lassonde. Also joining us this week will be Dr. Barassi. He's the Vice President of Exploration of Triumph Gold, as I just noted, and he'll give us an update on that company's multi-million-ounce Free Gold Mountain project in the Yukon. Some very exciting things, exploration results in 2018. He'll bring us up to date on that. And in just a moment, as I mentioned, Michael Oliver will give us his ideas, not his ideas, what the market is telling him about what's going on in the markets that we care most about. Regarding Pierre Lassonde, if you are a gold mining investor who buys Canadian-based gold stocks, I'm guessing Pierre Lassonde needs no introduction to you, but for those of you who may not know him, he is the co-founder of the largest natural resource royalty company, Franco-Nevada. In fact, I think it's fair to say that Pierre actually created the royalty business model for publicly traded companies in the gold mining sector, and there are few companies, if any, that have done as well as Franco-Nevada. Franco-Nevada was born in 1982, and over the next 20 years, the company provided shareholders with a 36% annualized rate of return. Franco-Nevada was acquired by Newmont Mining Corp. In February of 2002 for $3.2 billion, at which time Pierre became the president and vice chairman at Newmont. That was in 2000, up until 2007. He also served as chairman of the World Gold Council from 2005 to 2009. So we are really honored to have Pierre with us. He'll be with us the second half of the show. But we're also really honored to have Michael Oliver with us once again. Thanks for joining me, Michael.
Hi, Jay.
Really always good to have you here because you are the reliable voice, at least for me, and I think a lot of my listeners agree, that you provide a certain stability in a market that sometimes isn't all that stable, although I think your comments on gold suggest that you feel gold is quite stable now. What are you seeing in the gold markets? I mean, it seems to be kind of boring, really, Michael. It doesn't seem to be going anywhere. We had a little excitement a couple of weeks ago, but right now it's just seems to be just sort of chugging along.
Well, there's a difference this time in this rally up into the 1300s from the last low was 1161 in August. So it's been a decent up move percent-wise, but observe a few other markets at the same time. In particular, we think that the alternative to developed market stock indices or the S&P 500, the alternatives are basically two major market areas. government bonds, U.S. government bonds, that actually yield something, unlike German and Japanese bonds. That's one alternative. And it's been strong since December. As the stock market collapsed, the T-bonds went up, and it made sense to us. But it's also been erratic. The T-bonds surge big, then pull back sharply, surge again, pull back. So they're definitely a nervous alternative to fleeing money from the stock market. Gold's tone, especially since October, has been extremely resolute and unflinching. For instance, we're a couple weeks off the high now. It was about 2 weeks ago. We got up to 13.25 intraday on the spot contract, February gold. We've had a pullback of less than 1%. Normally, in these prior up moves that get above 1,300, is very erratic movement, a lot of volatility, a lot of swings. This is not. It's like a fist of steel rising slowly. And even when the stock market, as money flowed out of the stock market between October and December, gold, of course, was firm during that time. Not explosive, just constantly firm. But then the stock market turned and is having what we consider a very scary bear market rally, or a reach-back rally, we call it. We think it's topped. We think this is a nonsense rally to confuse and to intimidate the shorts and confuse everybody else. But the gold alternative, which definitely came on the scene starting from October. Remember, stocks topped in September, and gold was firming in September, October, November, December, all while stocks collapsed. But while the stock market's rally, gold has not given up ground, it's gained ground. And nobody's noticing this, and it's doing it despite the fact that the dollar index remains firm. It's not really going up a lot, the dollar index, but it's not giving up its ground. Basically, we're trading dollar index now where it was at the peak in August. So you can sort of draw a line across the August high in the dollar index through most of the action since then, and we're either side of 96 on the dollar index. Right now we're about 96.5, I think. So, but the dollar is definitely supposedly intimidating gold. At least that's what I read in the Wall Street Journal. There's an article today about how the strong dollar is hurting gold. Well, I look at the dollar's not really that strong, and gold's not pulling back. So I don't know where this information comes from. But I think the tonal nature of gold is very important right now. It's sort of a sideline technical. It's not giving up turf. The gold miners, GDX is what we focus on, and GDXJ. But GDX has gained a lot of ground since August as well, more than gold has on a percent basis. But still, it's lagged gold for the last several years. And our measurements indicate that I think once you get gold through 1350, 1360, which we think will happen, at that point in time, we're confident that the GDX will be outperforming gold on an ongoing basis. So it's probably the better place to be. But it's also unflinching. If you look at its action over the last several months or so, they had some resistance around 21 on the GDX because there's some price chart resistance there. We cleared that. Now we're up above 22, and it's just quietly nestled here. And I think that it's also saying something. So, again, as gold and the gold miners is an alternative to fleeing money from the stock market, you can either go to bonds, which are erratic, or the gold market, which is quiet and firm.
Well, that's important, Michael, because, of course, one measure of risk, of course, is volatility, right? Volatility of returns. And if I hear you correctly, what you're saying is there's more risk as defined by volatility in the treasury markets than there are in the gold markets and gold bullion and gold shares?
Also, the tonal nature indicates to me that the bids are strong in gold. In other words, they're not chasing it higher. They're not letting it flinch on the downside. So every time you get a setup where you think, oh, we're going to get a good correction here, quote unquote, I've heard that all the way up from most technicians, you don't get one. You spend 2 weeks trying to go down and you give up 1%, and it's resolutely bought on dips, and the dips, they're not waiting for a 3 or 5% correction to buy. They're waiting for 1% dips to buy. Somebody's buying it. I don't mean somebody as an individual, but the bidders are very aggressive in the sense that they're not waiting for sharp drops. And I think that says something. Of course, the question is, why are they so resolute in their determination to buy gold? And I think the answers are abundantly clear. But anyway, I think the tonal nature is very important on gold.
All right, Michael, I don't know about timing with you. I feel very confident in terms of knowing which side of the market I should be on at any given time. But I took out some calls, some 22.5 calls, March with the maturity March 22nd, GDX, 22.5. I think it's around $21.10 or 15 cents, something like that now. Do you think I can make some money by the middle of by March 22nd?
Right now, Jay.
What is it?
GDX is at 22, so you're only half point out of the money. Now, I can't venture an opinion on specific options and things like that, but I think that I don't think between now and let's say a month and a half from now the GDX is going to be declining. I think it's probably going to be higher levels than it is now, possibly sharply higher. I think the issue for GDX, and we look at its technicals, but we also look at gold's technicals, because visualize it this way. Gold is the mama. It has a leash, and the little puppy dogs are the GDX and the GDXJ and all the miners. They run ahead of it. They run behind it. They're erratic. I think that erratic nature in the gold miners will cease as soon as gold clears about 1350, 1360. I think at that point, the miners will grow a backbone, so to speak, and you can trust the integrity of their technicals at that point. So our focus now is on gold, but once gold gets through that mid-1300 level, I think that the miners will be the place to be, and also their tonal nature will change, and they'll outpace gold.
Yeah. As more serious money comes into this sector, I suppose that would be likely.
Yeah, it's a small sector after all. I mean, if you get some money fleeing the stock market, there are very few places that are performing well right now. Look across the board. I mean, I'm talking performing over the last 6 months, a year, and so forth. This is an area that somebody's picked on it, and they're moving money into it.
Michael, with 30 seconds, the dollar, you mentioned gold is performing well in spite of the fact that the dollar has been steady and somewhat strong even. How's the dollar looking to you now, medium term, long term?
Medium term, I think it's topped out, but it keeps coming back up to the 97 level, 96, 97 zone, and so it doesn't act like it's topped out when you look at the price. But when I look at momentum, it indicates the best bet is to assume that this congestion that we've had since August is really topping action. It's very unvolatile, by the way, dollar. It got up here, like I said, in August, and the euro is the prime factor in keeping the dollar firm. The yen's had a good rally, the British pound's had a good rally, but the euro is sort of stuck on the floor down around 113 to 115 zone, and I think you got to watch the euro for the shift in the dollar. And they're both sort of stuck in a range, but certainly a firm dollar, which is what the press says, has not hurt the gold market.
Yeah, that's very, very important, I think. Well, thank you, Michael. We'll have to leave it go with that. This is all the time we have for this segment. Look to talk to you next week.